back for another update. Let's take a look at Bitcoin dominance over here. Going to be a very quick update on Bitcoin dominance. You can see over here from 2019 we had a 3-wave move down in year A, 3-wave move up in year B, and then a 5-wave move to the downside within year C. And then from 2021 all the way up to the current date, we had our ABC up towards the 78.6% fib. Now, when you take a fib from this high in 2020 in December down to this low in September 2022, look how we came up to the 702 and the 786. Okay, we rejected off of the 702, had an initial reaction, which we usually have in crypto. You get an initial reaction off the 702 for your bear trap, then you creep on up towards the 786, and then you get the real reaction off the 786. So if we look a little bit closer here at Bitcoin dominance, you can see that on the weekly time frame we are rejecting off of this 786. If we look a little bit closer, so basically all I'm doing is I'm zooming in on this part of the chart right here, and we can see over here that on the weekly time frame we're rejecting off 64.64%. So all I would want to see here going forward is a one-day close below the 50% fib at 63.64% in order to confirm the downside trigger. Otherwise, we're going to continue to be range bound. Okay, so when you take a look here at this chart I made on Bitcoin dominance, when I first showed you the update about a week ago, this is what we have so far. Okay, we haven't had a clean break above this 786 yet. Okay, so we'll put this over here. Okay, like this. Okay, so if we can get a move below 63.54%, and yeah, so see that's the same level, 63.64%. That's at the 50% fib. And then when you take a look at this chart, that's the bottom end of this range. Okay, so if we come down here, get a daily close below, then it's very likely we're going to go down for your next leg towards the 200-day moving average, which would spark the next leg higher in crypto. So this leg lower on Bitcoin dominance would spark the next leg higher in crypto. And if we got a daily close back above the 786 at 64.64%, then it's likely we're going to come back up to these highs right over here and fill in this wick, or sorry, fill in this daily fair value gap formed on May 8th. Okay, we're going to come up here. So, and then we would have to reevaluate from there. But overall, this looks pretty bearish. You can see that yesterday was a bearish engulfing, and it was a bearish engulfing right off the 786. You can see that there's continued weakness off of this 786. It's like almost as if the market maker doesn't want to let the price above this level. So we'll continue to monitor, and I'll make sure to keep you guys updated. Peace out. Take it easy. See you guys in the next one.